Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the week, and learn something from it and plan for a better trade for the next week. And this is an answer for the week that's beginning from tomorrow, March 6th, Monday, 2023. And if you're watching this without subscribing, please subscribe and share it to your friends and colleagues. Let's get to the charts. This is the weekly charts that you're seeing for the Nifty on the left side and the Bank to the right side. Very clear. It's a wick reversal, an extreme reversal pattern, bullish with long wick size, and Banknifty has got bullish engulfing pattern. The candle for the last week has completely engulfed the bearish candle for the previous week. Here, Nifty had made a new lower low left side and trapped the bears who were shorting and moved up with a weak reversal pattern, extreme reversal pattern. And this is again a support zone where it had taken the support and bounced. So it's a change in priority bounce, you can say, if the sub move continues for the next week on the weekly basis, right? That's what we are. Let's look at the daily charts that you're seeing here. The last candle on the Friday is wide range bullish candlestick after a gap up. Same with the Banknifty also. Wide range bullish candle is what you see there. Clear bullish. Look at the width of the move. What percentage of move has happened there? It's probably more than how much is that in Banknifty? 2.3% and 1.5%. That's what the Friday's move is all about, right? You can also make a note that we are making lower low, lower high pattern, and the new lower low is formed on Nifty, but not in the Banknifty. But still, it's lower low pattern that is clearly seen on the banking index also. So it's at 42,000. If that is clear, then you can say that the previous high is breached and the lower high, lower low pattern is breached. Here similarly 18,200 levels, or 18,150 nearby, 135 to be precise. So if that is negated, then you have 18,200. If that is also negated, then you can say that we are into some kind of up. Until then, you don't know what's going to happen. There's a lot of resistance up here from the moving average. You hit that and then reverse and make another lower low. It's possible, very much possible. You cannot rule out because it's in a downtrend on the short term. Let's get to the numbers and see what exactly happened. It's a 0.75, less than 1% of moves that happened in Nifty, but Banknifty 3.38. That's 3 times bullishness. So it's kind of 1,349 points gained to the Banknifty. Nifty has we've seen the stick patterns and all that, right? Nifty has managed to, it did not manage to close above the 20 weekly moving average, right? And Banknifty is obviously more bullish, and it is sort of engulfing, which is very powerful bullish, and it closed above the 20 moving average also on the weekly basis, right? Both of them, we can clearly see that it had it has managed to just close on the edge, but not above that trend line from the earlier all-time high breakout had happened, which was attempted to be cleared multiple times. But yeah, look at this. It's at a crucial resistance on both. That's what it indicates. And short term, we have seen that it's 272, 1.5 and 2.13. So that's kind of, so 200 EMA is cleared on both indices. Fibonacci 16 retracement was a resistance. There was a support earlier, which was a resistance, and that is also not cleared. 200 EMA and Fibonacci 16 are major resistances. That's clear. That's one good thing. And if it has managed to close above the 200, 100 and 220, but it's resisting below the 50. This is Banknifty. I'm sorry. It is resisting below the 20 moving average in the case of Nifty. So 20 DMA is not cleared yet on the Nifty. Weekly DMA 20 also is not cleared. The move is only less than 1%. So Nifty obviously is not that as much bullish as what the Banknifty is. Banknifty is extremely bullish. So unless and until we have the 18,135 cleared and the 42,000 of the banking index cleared, we still have the possibility of a change of polarity on the downside, because the previous supports are now acting as resistances. CIP on the other side. That possibility cannot be ruled out. right? We have moved. There's a big comeback that has happened, especially in the Bank Nifty with the help of Bank Nifty, but we're still not sure. We have turned into sideways, we can say. That's all. From the momentum and the trend. We'll see that later. So Bollinger Bands also indicating that shift from contraction to the sideways on both indices, but it is still below 20 DMA, below the median of the band. So it's still a bearish bias is there on this contraction also. But Bank Nifty clear the contraction is for sure, because that sideways movement has got a bullish bias. So because it has closed above the EMA, right? So that's what it is all about. Let's look at the levels of the Nifty. So 61 would be a good support downside. This is a mistake here, please. Ignore that. These are all previous lows now. This is I did not correct that. So the first resistance on the upside would be 17,652, right, which is the previous swing high, and then there is a gap resistance at 17,800, and that is also very close to the Fibonacci 50 retracement resistance. And after that you have 7950 nearby levels, and then 18,000 on example, right? So 17,500 also could be a support downside again. So, but first major support would be 17,569 to be precise. So 17,500 would be a good support zone downside, and then 17,445, that's support. Then you have 17,400, then 17,300, and then 17,100, like as it goes. So previous swing low would be also a support zone. Bank Nifty on the upside has Fibonacci 50, that would be now the support major. That's at 4,800, then 4,500, then 40,000, and then 39,420, and then 39,200. Previous swing low levels. All of these two swing levels could be supports also, right? On the upside, first resistance would be 41,600 nearby zone. So it's a Fibonacci 38 retracement level, and after that 41,834, then 42,231, and then 42,331. So resistance upside, then 43,000. So this is very important. This point of 42,000 and this point of 43,000 are the zones where we will tell whether bullishness to continue. Until then, we are just sideways, still not bullish, neither bearish. Right. Similarly, here this zone of 18,200 250 zone, and also this 17,800. These are two zones which are very crucial. Right. This is actually 18,135 and 18,200 250. These are all the zones where the previous swing highs would be breached. A lower high would get breached, and then we can hope for bullish. Until then, we are just sideways, neither are we bearish. Okay? That's what, make a note of these levels and correlate that with what the open interest is saying, and then you can use it for looking at probability of the price may resist, or the price may break out, or price may break down. All these probabilities that we're talking about, because charts historically has done like that, so it may, the price may take find a supply and demand and all these things, right? Moving on. Now that we have seen the price action, the basic candlestick patterns, the Bollinger Bands, volatility and all that, let's move to the momentum and the trend. So weekly charts of Nifty is what you see in the downside, and weekly charts of the Nifty and the Bank Nifty, daily charts of what you see in the right side. Let's see the Bank Nifty first. So Nifty has got momentum in the sideways, and short term also it's momentum is sideways. So both sideways and rising up. Absolutely rising momentum, no problems there. Actually, the good thing is that it had fallen, the short term momentum has fallen to the bearishness. It has climbed back successfully, and there it is. But in the Bank Nifty, it's a little more bullish. It had never gone to the bearish zones. It had taken support at the RSI on the short term and then bounced. So this is the range shift on the daily that you are seeing. Range shift of momentum, where the range of the momentum has shifted from the bearishness to the sideways, taken a support at the RSI 40 and then bounced up. There is clear bearish. We have talked about that in our daily analysis also. And this exactly has played out as clear bullishness on the short term Bank Nifty. So momentum is rising and sideways and all with the extreme bullishness that can be seen on the Bank Nifty, right? So momentum is fine. How about the trend? The trend is where there is slight trouble. The trend has not crossed over in the short term on the Nifty yet, but the Bank Nifty, the trend has crossed. Just cross, but weak strength, right? So that is something. So The medium-term trend has not changed. It remains in the DMI negative zones still on both the indices. But short-term trend has shifted in the Banknifty, but waiting to happen in the Nifty. So momentum and trend, that's a story. Keep a note of all this, and we'll summarize all of this at the end. Now volatility, we already measured some amount of volatility in the Bollinger Bands. Now India VIX is another tool to measure. 14.4% of up movement means it's cooled off. This up is wrong. VIX has cooled off. That means when the market is rising up, VIX obviously normally cools off, not always, but normally cools off. So now it is at a very low G, 12.18 still. But keep in mind that whenever it goes to the low support zones nearby, there's a more probability that it may reverse and bounce up, just like how we are seeing here. VIX had fallen there and then immediately it bounced with 25-30% kind of upwards. Right? So be cautious on that. So VIX as of now is cool. The fear in the market is less. That's what VIX is indicating. Right? The bands also has started contracting, right? But not too much. The volatility bands between the median and that is actually big. As per the Bollinger Band study, the volatility is big. But here there is it is showing a little more less volatility. VIX as per the option strategy. We are at open interest data is the next thing that we analyze the data for. Right, Nifty. Right, Nifty and the Banknifty are kind of bullish. This is what indicates for the open interest data in the futures, because it's a short covering. Short covering is bullish when people are covering the shorts and going long. And Banknifty is already doing long build up for the last several days. So long build up in the futures open interest, but the option open interest for the March 9th weekly expiry data, that is also bullish. Put call ratio is 1.3, 1.13 and 1.35. Clear bullishness in Nifty and the Banknifty. No doubt about that. So options open interest as well as futures open interest are bullish. VIX has cooled off and it's at the lower regime. Again, kind of in favor of the bullish. So what indicates. Right, price action bullish, momentum is bullish. Trend is yet to turn over. It's not sure whether it is going to sustain, but momentum has picked up for sure. It is sideways, not as bullish. From bearish to sideways. Trend yet to cross over into the bullishness. So that's what summary is all about, right? Let us look at the levels. As of now, what option writers have made is 17,500 is where the highest put writing is. 18,000 is highest call writing. Then the second highest put writing is seen at 17,400 and the 7,900 is where the second highest call writing is seen. Right? So that is kind of a 500 point range is what for the option writers we have several days, 4-5 days before the next expiry on Thursday. 41,000 and 42,000, 1,000 points range is for the Banknifty. The highest put and call writing is seen. 40,000 and 41,000 is the second highest put and call writing is seen. Right, so overall, slightly wide range for the Nifty and Banknifty indices with option writers. So clear unwinding of the long positions can be seen in both indices. That means market is turned. Largest number of contracts are on the put side. Put is dominating. That means clear bullishness on the open interest. No doubt about that from the options data. Let's move ahead. How did the industrial sectors perform last week? What can we look for? Where is it overall sectorial moves, industrial sectors? Now, there's two sectors that went down last week. If you summarize the up and down moves that happened, IT went down 2.3%, pharma went down 1.8%. First, what was kind of just 0.5% down only, but otherwise metal, auto, FMCG, LTO has in general state plan only moved up. And the biggest gain was the reality. It's 8.25 has happened there, right? And 4% metal also has recovered. So metal had got beaten down, reality also had metal had also gained 4% up is good enough. Now the thing is that what remains bearish in the medium and long term, it's only the pharma. It's only the pharma sector that's good. Otherwise, all the sectors we see, it has climbed back from the sideways, what we can see. Right? For example, IT, short-term sideways, medium-term sideways. So overall, IT is sideways momentum. Metal, short-term sideways, medium-term sideways. So overall, sideways. Auto, sideways, sideways. Pharma, bearish, bearish. Pharma is only sector that is bearish overall. FMCG. We are doing multi-time frame analysis based on the momentum to check out what is happening. FMCG, sideways, sideways, or all sideways. None of them are bullish, right? This is sideways, sideways. That's what reality also. So everything is in sideways. Across sector, Except pharma, everything has turned into sideways at least. Nothing is bearish momentum, short term or medium term. Right? So that's a good thing that has happened. Across the sector, recovery is seen for sure. It's the same thing. There's different sectors chances. What you're seeing there, IT, you can see that it is fallen down after hitting the resistance zone. Momentum has also hit the resistance at the RSI 60 zone, fallen down. Metal had beaten down, but climbed back with a long wick size and then taken support and climbed back into sideways. Auto also has hit the resistance from the all-time high level, fallen back. Momentum also hit the resistance after climbing into bull zones and fallen down. Pharma deeply red, fallen into bearish zones momentum, and big downfall in the descending wedge. FMCG is flat hovering around. It's the most bullish among all the stocks because of it. A weak long size indicates a reversal, pin bar reversal. It's a consolidation rectangular consolidation that's happening since a long time, and there is probability that it can break out of this top. So you have to keep a watch on that. So otherwise, most bullish is FMCG. Although it is slightly slipped and hovering at the edge of the bullishness. So reality is climb back. As you have seen, it is the neckline of the rounding pattern breakout, and it is falling down there. It's also consolidating in a range, and it is big 8% up move is seen, and then it is taken RSI support and climb back. So all around sideways is what the momentum is of all the sectors except farm. And the sideways happened last week when it recovered from the bearishness from the short term. That's the summary substance. Now, industrial heavyweights, we are analyzing the 7 industrial heavyweights. HDFC Bank, how's it doing? It's been, this flat pattern has been there since so many months now. Momentum had climbed and stayed above the 60 for so many weeks, and it had fallen down. Now it is again climbing back. So green weekly candle is in there, but the flat pattern is still there. It is still closer to the bullishness. You can see it's not the crossover of the trend had happened. So sideways basically. So you see, although the bullishness is seen in the price, it has not fallen that bad as compared to all the stocks. It is still maintaining that price action positiveness, and the bullish momentum is maintained, and it is rising. The ones it climbs above the 60, the breakout will happen from the 1726 kind of level. So it's in the bear zone basically. Even though there is momentum and this price pattern is bullish in nature, it's in the bear zones. That's something that we have to keep it for an HDFC Bank. HDFC is also having that flat pattern. It is consolidating since months now, and momentum is slipped along with HDFC Bank in the sideways, and then the momentum is caught up last week. Right? So that's what it is. Lines has been consolidating zigzag, and it has taken that support of, and then moving up. Wick size indicates it has taken RSI support. It is pure sideways what it reacts to. Infosys hit the resistance following. It is doing the DEM pattern double top within the range bound move is what is happening since long time. Probably there are a lot of trade opportunities with respect to options, triangles, and non-directional strategies like that. And even the IT also. TCS also has blocked out and then fallen down since last 3 weeks. Momentum also has slipped, but yeah, all sideways, facing at resistance. The summary of IT stocks both. IG's Bank had fallen down to the descending wedge, and then a big comeback had come, and another again it fall down and big comeback. So it's at a neckline of the rounding pattern. So it's not ready to go, because it has got very good support as well as resistance. So it's not ready to go for the down from this. The strong bullishness evident because taken an RSI support after the big fall and then bounced up. So overall sideways. Kodak Bank climbed back in the sideways after having fallen down, but in general it is doing nothing but zigzag moves like the Nifty. Right? So sideways, all heavyweights are sideways. All heavyweights sideways. Right? That is a summary. That's it. Institutional participation. That's the good news of this week. Both the institutions were buying, and FS were crazy buying with 12,000 crore buying in between one day, and that makes it 6,000 crores buying. This is minus, ignore that's plus, it's buying. So DIs and institutions both are buying, which is good. But that I think that happened because of the Adani bulk deals or something that happened, which brought in the FI money. So anyway, regardless, as long as the foreign money comes in and institutions are buying, markets will move up. That's what is happening. So derivative side also it will move up. Net longs moved up is what that is showing. So ignore that minus 6,000 is plus 6,000. So both institutions will buy. How did the global markets and global currencies and commodities did? That's what we're going to analyze now. Now, first thing, currency dollar. dollar cooled down, 0.75% down. Remember, it had a 12% correction earlier from the top swing high, and then it climbed up, but again hit the top of the channel of the cup and handle top, and then it is hitting, facing the resistance and falling down. It's 104.52. All side is moved, is what it is. But it had, remember, it had fallen down to the bearish zones and then climbed back. That means it's not ready to give up the level and fall from the down. So price action wise, it's not a very comfortable scene to see. As long as it consolidates the zone is fine, but if it is again breaking out at some point in time, price action wise or price pattern candlesticks patterns wise, it doesn't look nice. It's bullish. Doesn't look nice in the sense dollar could consolidate for a long time, but overall it could break out as well. So USD and R also moved down last week. That is one good thing that happened with the currency. Rupee strengthened a little bit. It has fallen down. Along with the DeFi buying that came in and the Adani buyback, Adani sell of shares and all that, rupee for some reason fall began 82 after a long time. So it's 1.4% 1 week down. Big downfall. Is it RBI intervention? Is it for some macroeconomics that created it? I don't know. Technically, 1.4% is big for 1 week for that to happen. You clearly see that it's an M pattern, it's an ascending wedge breakdown, and if this breakdown is further happening from here, we could hope for an 80 levels. So this is consolidating, moving up, down. So 83.2, 83.5. So this is also another opportunity for options trading on the monthly. Beginning of the month, if you take, for the monthly expanse, if you take one direction strategies which are hedged, this should work. An example for which is already posted in the Twitter. Check out that. So that's the opportunity that is here. So rupee has gained strength last week for some reason, which is positive. Crude oil has spiked up on the other hand when dollar gained 79.82, still not above 80, which is still a relief, but if it's spiking back, look at the start of the crude oil, right? It's in a parallel channel bottom. It's unable to close above this 84 kind of levels, and if it climbs back, it could head up to the 100 levels, which is not good. But as of now, sideways, and remember there is a shift from range shift that happened, which is again bullish. There is a chance that it can spike up further, but as long as this resistance keeps it down, then it should be fine. Even gold also spiked up after hitting resistance earlier. What was that resistance? It was like 2.5%. It was up. 8% correction had happened. Now it again climbed back 2.5%. And this is a 17% up move. Right? This up move that you're seeing from, so it's a cup and handle pattern. It met the resistance in the top of the channel, unable to move above this 1950, fall down. Now again it is spiking up. Right? That's what is happening. So gold is up, gold is up, dollar is up, but rupee gains. That's a big thing. Now, global markets. We are analyzing the Dow Jones index, the Nasdaq index, and the S&P 500, the broader market index of the US. Using some other markets, we are analyzing this. All of them has got a descending wedge and it's at the top of the channel. Last week, it was showing bearishness and it had hit the resistance, failed miserably, just like how it failed multiple times earlier. It had fallen down, beautifully taken the previous support zone, and then bounced up. Right? That's a 2% bounce that you see in almost all the places, all the indices, which is good. But remember that we're still at the resistance on the top of a channel. So resistance zone very crucial. If the breakout will happen or another big fall will happen. So it's all sideways movement is what we have. So that's 1.75 up, S&P 2% up, Dow Jones 1.75, Nasdaq 2.8%. So all green as of now. So if it sustains or not, you never know. But yeah, so globally the cues are good last week. So we should hope we can hope that it will remain the same for the next, right? Based on the chart. As well. Sideways movement for all commodities. Commodities also is fine. The only thing is gold should not further shoot up from here at this level. Right? It should stay below the 85 kind of levels at least for us to be okay. Right? That's the thing. But gold is spiking up. Gives us a hint that probably equity markets may come down again. You never know. So now gold spikes and breaks out. That is where the trouble is. Normally seen in the equity markets and something. But yeah, overall things looks positive on that commodity side and global market side. Right. Now, two topics. Aditya Birla Capital, it's a holding company of the Aditya Birla Financial Services. It's a cup and handle breakout and it's a good risk reward. Whatever market lines are all stop where you have to do the trailing stops and the resistance upside. Keep tight stop losses. But handle pattern, rounding pattern, breakout, multi-year breakout, good volumes and momentum and trend around bullish on the medium term. That's why the stock is good. Second one on the long is NTPC. It's a consolidation. It's in a parallel channel since 2-3 years now. Big volumes, bullish trend, bullish momentum, and you can enter even now with a tight stop loss. And from the breakout, you can trail up ahead. No, the risk reward is reasonable because you can go till the top of the channel of the trend line where it is short. Maintaining. It's a public sector company and reasonably good dividend yield of 4% or something like that. Right? So the two stock picks, both long are the below capital and DPC long calls. Next week, one more. This is nothing but a calendar split. We are selling next week's 1700 put, and we are buying a far week next to next week 16 March 17500 put. So basically we are it's a bull put, we can say. We are not bearish, we are neither are we very much bullish, but if it goes in the direction of the bulls, then we gain. Otherwise we lose less than not we lose, but the profit is less because the market is in the uptrending mode. So it's little risky as compared to the normal non-directional double hedge, double diagonal. As compared to that, it is little risky, but you can get out of the trade if the market is facing resistance and falling down. Just cut out the rain, not enough adjustments in this. So that's a counter spread for a change instead of having double diagonal counter spreads every time. Right? The hope is that the market will continue to move and then close about the 8,700, 600. Right? The range is good. Not the range. The hope is that 7,600 would be head for the next week. But try to exit. Within 2% of profit and not hold on with that hoping that it will further go up. As soon as the 2% of your initial capital is received, you get out of this, right? Probably a little less, little risky trade as compared to the normal ones that we take, but it's hedged. What do you lose worst case, right? And the number of lots can change as per the risk capacity. Right? So for every 1 lakh you can take 1.5 lakh. You can take one. Just spread, it's completely hedged. So that's a payoff of Nifty. Now that we have seen strategies and different things we have studied in detail, let's just summarize what is it that happened last week and what we can look forward to. Last week it attempted, the indices attempted to move, tried to move up. It's evident. Remember that is after 9 to 10% of correction in indices. Right? And primarily the attempt was with the support of the banking stocks, banking on the banks, right? Because bullish engulfing pattern is evident for that. That's a kind of comeback that happened, right? But remember that we had lost that support of the crucial place from where earlier we had made all-time highs, right? It's still in the descending wedge. It's still below that support, below that that would act as support resistance now. Right? We're talking about that descending wedge from where Nifty had already broken out. So we're still below that, but we attempted to come back after making new lower low indices, right? So to summarize, momentum is rising, but still not bullish, sideways. Trend crossed over in the Nifty, not a crossed over in the Banknifty, not a crossed over in the Nifty. So it's trend is completely not turned positive. In the case of medium term, short term also it does not happen fully. So, but it has improved. Momentum sideways, trend also kind of side, not even sideways. Trend is a trouble. Expansion, consolidation, from expansion has turned consolidation. This is positive, bullish. But overall, consolidation means sideways movement, not bullish, right? Not bearish. Dollar is falling, which is good. Rupees gains a little bit. Green US indices, but it's a crucial zone, right? So, open list is showing clear bullishness, but it can change one a day. Right? 1+ bullishness is clear there. Open interest and put ratios. That's all fine. So it's you cannot be sure of whether it's because it's a resistance of 50 and 20 DEMAs on daily charts. That's what it has got stuck, hit, and then pull back a little bit if you see the charts. So it is at a resistance zone. So it's cautious bullishness, what my view. So until the price action swing lower highs are taken out at those levels that we talked about, what are the levels? 18 150 and 42,000 on the data respectively. So until that is taken out, we just cannot be sure, because we are in a downtrend. Price action wise, we are making lower highs, and we're going down. So, but the bullishness in the uptrend interest, the US markets, so momentum picking up, trend crossing out in the Nifty, shift of the momentum, and all of this, and the strong banks, all of this does not allow me to think bearish. So I'm cautiously bullish for the next week. That's why. There is also, bill bulls can also hope for that stiff resistance upside, and the CIB downside can happen. Just keep that in mind. You have to be cautious. That's all. Which is cold off. It's not right. There is less fear in the market, but it has been rising 20% 1 week, and next, right, falling 20%. That's the kind of quick moves that happen. But overall, it maintains the lower regime. It's not spiking to the 1820 levels yet, but it is very much possible whenever the VIX is at the lower range. It can spike at the mean reverting nature. So, global QC, inflation, interest rate hike, COVID war, all these things are still there. Uncertainty is still there. Crude is rising up and rupee is weak, but overall, uncertainty is still there. You got to be cautious. US market at resistance. So, cautiousness has to be there. VIX at the lower regime, it can mean revert and spike back to it. So, the moment it is near to the 20, then you have to be sure the price action will tell you get out. So, the medium term, 16,650 and 36,800 is the lower levels for the Nifty and the Banknifty. 18,250 and 43,000 is what you would look for on the Nifty and the Banknifty on the upper side. Right. So, and in between we are doing nothing but consolidate. Whether you have an engulfing day one day and an engulfing bearishness another day, it doesn't matter. So, we just consolidating as long as these levels are not broken on either side. So that's what your medium term, that's what you have to keep in mind. But not for a week, but the medium term consists of multiple weeks basically. Right? The week levels we have already seen the option interest and also the charts. Keep in mind. Now, yeah, as I always say, have one-directional strategies or vertical spreads. Have hedge positions always, so that you know what you will lose and you'll be in the game still tomorrow for another play. Otherwise, you're out of the game and that's it. You cannot re-enter and then try your luck or try your probabilities game. You cannot do that. So always hedge your positions, have a defined risk. And also, when the market is cracking down, you can buy it. You can invest in SIP mode using different option strategies itself. With the help of options itself, we can get rental incomes or invest in SIP mode. Check out the videos in the playlist for that. Cover calls and cash circuit puts and all that helps you do that. Right. So that's my view. Cautious mild bullishness is what I look forward for the next week. I hope you have learned something from it, and if you have gained some knowledge and some analysis from this detailed study in the weekly, then please don't forget to subscribe if you're not subscribed. And if you're subscribed, please share it to your friends so that we get some subscriptions more. We have very low subscriptions, and please, having more subscriptions keep us motivated to give you a better content every week. So, and in case you're interested in paid services for Telegram, for educational purpose, you can click on the link given in the description, and then that can also be available. So please subscribe and share it, friends. Thanks for your support. Please fill in your comments, feedback on what you think, how we can improve the content, etc., etc. Right. So, happy trading, happy learning, happy investing. Bye bye.